Hello again, everybody. It's your boy Chicago Sean McLaughlin. Welcome back. It's Wednesday, January 27th, 2021. And what a wild day we're having in the markets, huh? I mean, these stocks that are getting short squeezed. I mean, we've all heard about GameStop, but there's a number of stocks that are getting run right now. And this is getting pretty damn interesting. I've seen a lot of crazy stuff in my days in the markets, but boy, this stuff is getting pretty wild. And on top of that, we had the S&P 500 have a pretty big down day, at least by recent terms, giving back almost 9 points, a little over 9 points by the close today. Wild day. And you know what? When you have a big one direction move doing what I'm doing, that's never a good thing, or that's rarely a good thing. And today was no exception. So I'm going to share my screen with you here, and I want to highlight this first. This is the little spreadsheet that I built, and I got some feedback from some of you yesterday that this was hard to read. So I took that feedback and I've blown it up a little bit, a little larger, so hopefully you can see it better. And basically what I'm doing here is I want to track what my total exposure is, my exposure against a one-way move, right? So I list, this is my current position right now as we close the day. I'm long 5 puts that you can see here. I'm short 5 puts that you see right there. I'm short 4 calls and long 4 calls. So really the biggest exposure is down here. You can see my put exposure is I'm exposed as much as $3,000, which basically means worst case scenario, if all my puts, if the market crashes and I get all my short puts assigned against me, I can obviously exercise my long puts, and the net total out of pocket cost for me would be $3,000. You could see here so far, I've collected 1682 since we started this campaign at the beginning of last week. So I've collected $1,682. Worst case scenario in a market crash and all these puts get assigned, I'm out of pocket $3,000 there. My net loss is $1,318. That's obviously not ideal, not what I want, but that's the situation we're in right now. Obviously on the call side, if you were to scream higher from here for some strange reason, I'm only exposed to the tune of $900. And if that situation were to come out, I'd be totally fine with that because I've collected 1682. I'd walk away with a $700 profit. So I'm not worried about the call side right now. So that's what this little spreadsheet is here. Let's just move this out of the way, and then we'll get back to business. So you could see here, you can see my positions displayed. Let me maybe zoom out just a little bit. So you can see where my positions are right now. The red flag there shows me where the S&P is trading right now. So you can see my long puts or my short puts are in the money. And this is after I did a roll this morning. So when I walked in this morning, obviously the market was gapping down quite a bit, although it's since fallen significantly more. But at the time, I had some short puts, and you can see the trades right here on the right-hand side. I rolled my a 383 put down to 378. I had to go out a few expirations to February 5th expiration. And I also had some 382 puts that were expiring today. I rolled those out to February 3rd down to 377. So 377 and 378, that's right where the market was trading at that time. So those were at the money puts. The market continued to fall since then. But the rolls I did for credits, you can see here, I brought in 10 cents there, and I brought in 54 cents for the credit here. And then I also rolled out my long puts. I rolled them out and down for credits, which, you know, in hindsight, I'm thinking maybe what I should just do with my long puts when they go in the money, I should just roll them out, same strike to the next expiration series, basically a calendar roll, pay whatever debit that is. I think going forward, that's going to be my best move. But in these cases, what I did was I rolled these in the money puts, but I rolled them down to the next expiration series to the 25 delta. So I did them for credits, which was nice. That was my original thinking. I wanted to bring in some credits. But in hindsight, I'm wishing I just did a calendar roll, meaning I just rolled my 378 put that was expiring today. I rolled it out to a 378 put on Friday's expiration. I would have paid a debit, but that's okay. I could have made up those debits through other means, through some other selling some more spreads. But this is where I look now. This is where I am now, and no reason to panic. My risk is defined, as I said. And I can't really lose much more from where we're at here. But that's the good news. So any kind of bounce, any kind of rally from here, and the S&P is going to play very nicely with my position. And so I was telling you about the total credit. So since I started this back on January 19th, which was the beginning of the last trading week, you could see this is how much I've brought in total. So 1,700 minus my commissions and fees, and that's where I got that 1,600 something fee tally. Now let's just look at today. And right now, this week, I'm trying to just bring in $200 each trading day. That's my goal, okay? And today I brought in 312 minus $20 in commission, so let's call it 282. So I hit my cash flow target. I'm trying to stay on target with that, right? Just because positive cash flow every day. As these cash flows start to build up, they're going to more than compensate for my total exposure as I track right here on my spreadsheet. So guys, that's kind of where I'm at right now. That's my thinking. I think I made some mistakes today. I feel like I made some mistakes when I rolled those long puts. Not terrible mistakes, no big deal, but something I could certainly learn from and move forward. And you know what? This is why we're doing this with small stakes. We're trading one lots. We're not taking on a whole lot of risk here. The total risk in my portfolio here is still very manageable. We're talking less than 5% of my capital, less than 3% of my capital. So we're doing this with small stakes to learn the process, learn the mechanics, and in the hope is I want this strategy to be something that'll work in a bull market, a bear market, a sideways market, something that's adaptable that can work hopefully forever, or some variation of this that could work forever. That's really my main goal. I'm not trying to find the perfect strategy for today's market, which today's market's a little weird. I'm not looking for the perfect strategy for the market I hope to have. I'm looking for an adaptable strategy that works in all weather. That's the goal here. All right, folks, happy trading to you tomorrow. Hope you're doing well. Hope you have a good night, and I'll see you again tomorrow. Good luck. Bye-bye.